Every kiss begins with K.
Timing's everything in this business. Consider the case of Signet, the jewelry retailer you know as Jared, Zales, and K Jewelers. After spending ages in the doghouse because of corporate cultural issues, Signet brought in a new CEO last year, Jenna Drosos. And boy, she's been spearheading an incredible turnaround, one that had the stock soaring to the stratosphere over the summer. Lately, those Signets erased all those gains and then some. Darn, things down more than 50% from its highs in August, including a hideous 18% decline last Thursday alone. The problem? Well, now that the economy seems to be slowing, investors are worried about competitive pricing and promotions, which cut into profit margins. We need to get a better sense of what's happening here, which is why earlier today we visited Virginia Drosos, the CEO of Signet, at one of her K Jewelers stores in Edgewater, New Jersey. So take a look. 'Tis the season, Jenna. Tell me about this store and how you're doing for the holidays.
Well, thanks, Jim. It's great to have you in our store. We're in a K off-mall store. It's one of our best performing footprints, so we're very excited about the holiday season. We have 90% of our ads are new, so we're driving traffic into the store where customers are finding lots of beautiful new merchandise. Our Love and Beloved collection is one of the highlights, 3 stone rings, beautiful Neil Lane products, so we're very excited.
Those of us who have bought Neil Lane know that this is a very high-end jewelry for what we regard as K, at least the old K.
You know, K has a range of jewelry for everyone's budget. In our bridal collections, for example, we start down in the hundreds of dollars and go all the way up to over $10,000, depending on what kind of center stone people want to choose.
You have done remarkable work in trying to repair what you have told me in the past is troubled, let's say a troubled culture. Where are you in the transformation?
Well, we called Path to Brilliance a 3-year transformation. We are seeing some good green shoots in our customer-first, omni-channel, and our culture initiatives. And I think our team is really passionate about what we're doing. I mean, you know, look, I mean, this is an exciting place to be at the holidays, and I think you can just feel the energy of our team.
Now, on your conference call in December, some people were concerned, you saying that you see a more competitive environment, department stores moving in. You actually talked about the idea that there could be clearance. I did not know these things. You're so transparent, very big change from the previous culture. If these things are true, how can sales be so good?
Well, we're very transparent about what we're seeing in the business, Jim, for sure. We always have clearance as part of our business. All retailers do. Ours has been a little higher this year because we've shipped in so much new product. About a year ago, 20% of our sales were in new merchandise. This year, more than 30%. So it's really representative of the strategy change that we've put in place.
Everybody wants to be in this business. So I know the department stores are all stepping up jewelry. You've got more than just K. How's everybody doing in the different nameplates?
Well, we have some competitive advantages that we're really leveraging for this holiday season. Certainly, our service is one of those, and our omni-channel experience. So a lot of retailers, people can just go online and buy things, and that's absolutely fine. In the jewelry business, people want a connected omni-channel journey. So, for example, 40% of people start their search online for bridal jewelry or for gifting, but for bridal, certainly more than 90% of the sales actually happen here in the store with our expert consultants.
It seems like the bridal's got very good gross margins.
Well, our business in general, we think is healthy from an operating profit as well as a top-line sales standpoint.
Right, now, I know you're a conservative person, and yet you bought back from 2016 to 2018, go from 79 million shares down to 51 million shares. That's pretty aggressive. Is that the right use of capital? The stock has come down at an average price of 55. I know that there are people who took profits after this quarter. Is buying back stock still right?
Well, we're very thoughtful about our capital allocation strategy, and what we declared at the time that we outsourced our credit portfolio is that we would use those proceeds to buy back stock. At this point in time, what we've said about capital allocation is that first, we'll use it to invest in growth of our business,
that's what we
like
want.
the same-store sales growth that we saw in the third quarter. So 3 quarters in a row of improved performance for this business. So that's by far and away the #1 place that we'll put capital.
I know you were troubled when we first started talking about the way about some of the credit issues. You did talk about claims experience that did seem to be hurt the bottom line a little. We threw that.
Well, the concerns that we had last Christmas season were real. We had operational issues with how we had worked on the outsourcing of our credit portfolio. We fixed those. And we feel very good about that. In fact, we invested 4 hours of training for every single one of our jewelry consultants in Kay and Jared across the country to make sure that they feel comfortable with all of our payment program options, leasing and credit, so that they can help customers buy the products they want this holiday.
Well, I'm thrilled that you want to grow. Where's the money being put? I saw the Piercing Pagoda numbers. I know it's not big enough. It is on fire. Why not just put some money toward that? Because that is, I know from my kids, piercing is the millennial experience.
Yeah, Piercing Pagoda is absolutely on fire. We're really excited about that business. One of the things that's doing so well at Piercing Pagoda is gold. We have beautiful gold jewelry, chains, earrings, bracelets. We've brought that across our line. So we have outstanding gold selections here in this K store, ranging from $50 up to $9,000 for a beautiful diamond-encrusted statement necklace.
Okay, so just last thing, just want to spend some time on the culture, because this is something that you came in to a situation that there had been some negative press, had nothing to do with you, about a male-dominated culture. You have brought in fresh people who are trying to still root out anything that's wrong. Where are you in the transformation? Because you said it was going to take 3 years.
Yes. So first and foremost, I'd say that diversity and inclusion have been hallmarks of my career, and I would never be part of a company that wasn't pristine on that front. So I think we've got that very clear in our culture. It's also an exciting place for talented people to be. I mean, look at our store manager here, our district manager, our VP of regional operations, our division VP women, all the way up the ranks.
I think that's fantastic. Now,
70%, actually 70% of our store managers across the country
and
are
your top
women.
management?
And, more than 50% of my C-suite and 50% of our board of directors, which for a public company you would know is a fantastic result.
No, definitely.
But it's not just about having women in our organization. It's about having a place where everyone can bring their full talents to work every day. And
still
that's
able
what
to
we
find
work
good
for.
people, and it's a tight labor market.
Yeah, it has been a tight labor market. We got out in front of hiring for the holiday season, and we're fully staffed in our stores. We're feeling good about that.
It sounds like it could be, I know some people are struggling right now, and some of them mall-based, but obviously you're giving a pretty positive picture, maybe even more positive than December 6th. I mean, that's not that long ago. I mean, so obviously you're having a good look at it, though.
I'm trying to give the same picture, actually, that I gave on December 6th, which is we did raise our full-year same-store guidance after having a good first 3 quarters. We feel like we've got the right merchandise in place, the right marketing. We've got our store teams rearing to go. So we're very focused on executing a strong holiday.
I think that's excellent. That's Jen Nedrosa. She's the Signet CEO. Thank you so much for your time. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.